Andrew, you thought we would see a strong market heading into the end of this year. You were looking for the S&P to hit 6,000. It looks like that's a more likely bet than it had been, but it's not necessarily working out because of the reasons you thought it would happen. You want to walk through what you see right now, where you think markets are headed?
Sure. So good morning. So look, the market got back to the presidential kind of handbook cycle of how it trades. Once Joe Biden dropped and we had a less known candidate. Prior to that, the VIX all year was very low because both candidates, we knew what we got. And once that happened, the VIX started to spike, which it normally does in a presidential election year, and then until the election night. And that's when the market gets back to fundamentals, and that's when we get a rally. So I understand the Fed cut 50 basis points. That got the focus. I'm surprised by the magnitude or the speed with which the market has so positively reacted. And really within the rally, it's been so led by what I'd call high beta value and growth stocks. That has surprised me, although, I'm obviously constructive on the year overall.
I know you think that the market could go up after the election just based on the idea that, OK, the volatility's gone. We know what we're getting. What happens if it's either a blue wave or a red wave and one party takes the presidency, the House, the Congress? Almost every guest we talk to says, don't worry about the craziest provisions that these candidates are talking about economically, because there's no way that's going to happen. What if it does?
Sure. Look, I'm no expert in that area. I've got to go with what the experts say. They say it's a low chance. I think if that were to happen, you'd see a substantial correction in the market because of increased uncertainty. I think the reason the market tends to rally after the election, and I think that's very powerful this year, is that, fundamentals are pretty good. And the bottoms up number for next year for earnings is $280. Now, Wall Street top down is a lot lower. It does remind me of last year where the bottoms up, which is guided by companies, are saying a stronger economy to start the year than what top down does. And I think that's why the market will focus on that after the election. But I do concede you're absolutely right. If we get a sweep, we'll be more focused on Washington than back to fundamentals.
The 10-year is back above 3.7%. 372 is where we're watching this morning. You say that's a sign that inflation could come back.
Well, yeah. This is, again, what I go back to. I'm surprised by the acceptance of what the Fed said, which is low inflation, economy soft landing. That surprises me because usually when you get this type of cut, there is some anxiety that perhaps both sides of the ledger, low inflation and soft landing, doesn't work out perfectly. But that's not what rallied. What rallied is, yes, they're going to be right. And now you're seeing the 10-year move up, break-even's moving up, which suggests a hint of maybe inflation will come back at some point. And I think that's a possibility. So to me, it's just a question of positioning is now very optimistic, and that gets me somewhat concerned that what could happen. The chance of we get an economic data print that says hard landing, or inflation print that says maybe it's not so obvious inflation's coming down. That's what worries me.